The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Fed Day, 9 a.m. Eastern Time, Wednesday morning. We got a decision, 2 p.m. Eastern Time today. Press conference at 2:30 p.m. Eastern Time. It's going to be an interesting one, man. Not often do you go into what is expected to be another hike, right? We're reaching areas that we haven't seen in 16 plus years. You're talking about going back to 2008 in terms of the rapid acceleration of rates that we had at that time. And what do we have? We have banks failing over the weekend. We have Fed hiking. And on top of that, we have a market that accelerates lower yesterday on the regional banks. It looks like the banking crisis is not over, folks. Jumping around a little bit this morning. We'll get right into it. S&P is up by 4 points this morning, 41.41. We have some jobs numbers this morning. We have a little geopolitical risk in Russia, Ukraine, drones down. We have a Fed decision on top of it. We have earnings on top of that. We have AI that's always in the mix recently. And yeah, let's get into the Fed. And let's jump around before we do, I guess. Crude. You got to talk about crude, man. It's not stopping. Yesterday, quite a sell-off, 69.47. Now, pretty interesting that you get the OPEC plus surprise cut. You jump up to $80. And just like that, we are actually far below where they came into that number. It's going to be interesting to see what happens as we get into $69 to $65, the lower boundary there recently in crude as it accelerates lower, man. You jump over to gold, right? Quite a day in gold yesterday. Today, pretty calm action so far. Just kind of hanging out at those price levels you saw on the highs of yesterday. 2025 was yesterday, 2021 in gold today. You jump over to the dollar index. Backing off, 101.60 right now from 102.40. Quite the pullback from the dollar index. You take a look at this thing on the daily, right? Pushing the lower boundary lines recently. Yeah, we got an acceleration above 102, but just like that, you give it up, and we are jumping around at the lows that we've seen recently in the dollar index, and we jumped in notes and bonds. On Fed Day, you talk about accelerations, man. Worries about this economy as it's risk off, flight to safety, people buying bonds. That's pushing the yields down. That's going to help the pain that's getting caused in the banking sector. You got the 10-year up another 8 ticks right now. You got the 30-year up 18 ticks right now, and we got to jump over to the VIX. Flirting with a 15 handle. Not flirting, had a 15 handle on Monday, flirted with a 15 handle yesterday, and then boom, quite the acceleration up to $20. Especially interesting in terms of some of the headlines that you get out there, okay? First, you have Jamie Dimon saying this is the beginning of the end, right, when they take over First Republic. Not the case, man. Not the case at all. And there's your headline. Bank pain is just getting started. That's ex-Fed President Kaplan saying the Federal Reserve should do a hawkish pause. Now, he's talking about a pause. That's not going to happen today, folks. Regional banks fall on the eve of the Fed policy decision. That is the most interesting part of what's going on. You look at PacWest, right? Not sure what's going on in their books, man, but they came out with some pretty strong numbers in terms of their earnings. I'm going to back it up just about a 10-day, okay? Quite a difference from what First Republic came out. They beat expectations. You see the spike higher. You spiked to $13. You came into those earnings at $10. But folks, there's something going on this week, okay? And never be afraid to admit that somebody might know more than you do. And I imagine that somebody knows more than I do, and that this stock is accelerating lower for good reason, because maybe the writing's on the wall here. I know, shocking, right? But you're talking about falling from 27 down to 10. Now we see that it just pushed the lows at the height of the pandemic rush in the middle of March. Pretty remarkable action, man, as we got banks failing as we come into a Fed hike. Now, what to watch for the Fed? What to watch for? And I think this sums it up well, even the headlines. Chair Powell will likely signal further moves depend on the data. I've been talking about it, folks, that we just got ADP data, okay? We'll jump over to that. Why not? We'll jump over to it right now. Surprise, with the biggest private payrolls gain since July. It's so amazing how you go back and forth here in terms of Everybody's worried about the economy, and they're worried about earnings because the Fed is approaching the end of their hiking cycle. But there's quite a but in there. If things get too hot, it's a problem because inflation has not been squashed yet. It's come down, okay? But when you start seeing payrolls gaining the most since July, talking about 300,000 jobs added in April, topping all estimates. Wage growth slowed. The Fed's going to like that, okay, as workers came off the sidelines. But nonetheless, you're talking about 296,000. That's after a revised 142 in March. And while the pace of job growth accelerated last month, wages cooled. For those who changed jobs, look at the numbers we're still dealing with, though. If you changed your job in the last year, your pay raise went up 13.2%. Yeah, it was up 14.2 from the prior month, okay? And that's the slowest pace since November of 2021. But, folks, it's still 13.2%. And that's the increase in annual pay if you just changed your job in the last 12 months. Remarkable. Where are the jobs? Leisure and hospitality, education, health services, and construction. On the negative side, manufacturing, financial activities, professional and business services. Yeah, and so you got Neither Richardson, the chief economist at ADP. She's out there, of course. These are ADP numbers. Slowdown in wage growth, clearest signal of what's going on in the labor market right now. I mean, clearest signal, you're adding 300,000 jobs, and we got unemployment under 4%, man, and we got inflation that's still between 4 and 5%, and you have people switching jobs making 13% more than they made a year ago. That's some pretty big, important data in there. Well, if you stayed in the same job, almost a 7% pay increase still. Pretty remarkable. All right, and we got a caller. Why not? Let's jump to it because we got an interview coming up next. We got Jose in Davenport. Is that right? Jose, good morning.
Yes, top of the morning. Hey, this is very, very exciting waiting for the Fed at 2 p.m. It's almost akin to Christmas morning. My brothers and my sister, we used to look down from the second floor through the banister and claiming our Christmas presents around the tree. I'd say, oh, no, that's mine. No, that's mine, too. You know what I'm saying.
Fond memories, Christmas morning, nothing like it, man. What are we talking about in the Fed, Jose? We got about a minute and a half here.
Okay, what's your feeling? Whipsaw action today? Because even if the market's up today, they're going to kill it off tomorrow with this debt ceiling waiting around.
Yeah, the debt ceiling's looming, man. I think we saw a little bit of a creep up yesterday, just in terms of the headline from Yellen talking about that it might be earlier than people expected for the Fed. You know, I think he's going to leave himself some wiggle room because I think he has to, man. And I don't imagine the market's going to get too shocked by anything going on. And if it does, then I'm not sure why it's going to be shocked because, you know, there's a lot of optimism priced in, as I'm sure you know, Jose. We're pushing 4,200, right? And meanwhile, we're still hiking while the banks are practically failing. So I think the market's getting a little bit ahead of itself, right? That, okay, we know that it can't hike to 7, 8, or 9%. We're nearing the end of it. We're going to accelerate higher on the premise that they're going to do that. So, you know, I see some risk to the downside. I've been talking about it, man, I do. But I don't see a shock because he's going to get 2 months of data by the time they have that June meeting, man. So no matter what, you know, he can't tell us what's going to happen June 13th and 14th when we're barely getting April data right now, and we're going to have April and May before that June number. So that's kind of the theme I'm looking for, man.
Good information. Okay, thank you.
Okay, I appreciate the call, Jose, man. You have a great day. Thanks so much. Folks, stay tuned. We're coming back with our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got S&P futures up by 7 right now. Markets in the green. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, the TD Ameritrade Network right here on Tiger TV with Fast Market. Your host, Kevin Hincks, Tom White. They have an outstanding team, folks. They walk you through hypothetical trade setups. They're usually talking about 3 trades each program. They walk you through that trade, all of them using options, all of them talking about defined risk. And boy, Kevin Hincks, you guys picked quite a name for the program, man. We got quite a fast market recently. Good morning, Kevin, on Fed Day.
Good morning, Tommy. Yep, big day today. And, you know, I was just talking with Oliver Rinnick. It's amazing, Tommy. The market, crude oil, the 10-year yield, they've already had a volatile week. We haven't even had the Fed meeting yet. So I think this week, with payrolls coming up on Friday, Fed meeting today, it's only going to get busier as the week goes on. So I think everyone should buckle up here because things are going to get a little crazy. Now, I think Jerome Powell's going to raise by 25 basis points. Then things get really interesting, Tommy. Does he go dovish and pause? Does he acknowledge that inflation is sticky and has plateaued up around this level and hint that there's more work to be done? How does Jerome Powell frame the market going forward? I think that is where all the speculation in this market comes in. I think you've got, earnings that are interesting. AMD, you're looking for a bottoming in chips. It was with AMD yesterday. It'll be with Qualcomm today. You're looking for a bottoming. And so far, you're getting numbers that aren't showing bottoming just yet and guidance that aren't showing that. Starbucks is down this morning. They had pretty good numbers, but the stock was way overbought. It had an incredible run and was extremely high. So not shocking and if you watched the show yesterday, we basically said that. Not surprising that Starbucks would back off here from their earnings. But I think the ADP data today still showing that leisure and hospitality number, 154,000 jobs. That's more just in leisure and hospitality than the market was expecting for the entirety of that number, Tommy. So, yeah, there's a lot going on this morning to start the day.
Seriously, right, man? And I got Starbucks up there. Boy, quite an acceleration. I got it up on the Thinkorswim platform. Just going back a year, I got $68 on the chart, and you came into those earnings at about $115. So, yeah, quite the acceleration. Jumping back to the Fed, of course, it's so interesting, Kevin. I saw the ADP number this morning, right? And in my own head, I'm still trying to do the gymnastics of, I think the market has transitioned to kind of like you're saying that, of course it's going to be important what the chairman says today. But we are nearing the end of this hiking cycle, assuming inflation finally, catches up to where the economy is weakening. Maybe it takes 3 or 6 months. Maybe they pause. But we're at least, 14 months into a hiking cycle where maybe the market's thinking, okay, we're going to be over that hump. So maybe now the focus is on economy. It's on earnings. The question is good news good news, and is bad news bad news? I know we talk about it, but I see those payroll numbers, and it's so funny, Kevin, because my head's doing gymnastics, right? And I'm saying, okay, is a lot of jobs a good thing right now, or is it a bad thing? Is it a good thing because the economy is maybe stronger than people are worried about, or is it worrisome because the Fed is still worried about inflation? How do you think about those numbers, Kevin, when we are approaching, like you mentioned, the jobs number on Friday? And it's so interesting how the market is still transitioning, I feel like, because we're not out of the woods yet, where the data is and whether it's a good thing or a bad thing, because the Fed is not done yet, potentially. What do you think of that?
Well, the problem is not the good numbers. The problem is the product of the good numbers. And the product of the good numbers means that more demand for goods and services, higher wages, which means more inflation, or sticky inflation, which means Jerome Powell. Remember, since Jerome Powell started raising rates a year ago, March, Tommy, the government has spent $2.8 trillion in brand new spending. You're talking about a debt ceiling negotiation where one side is refusing to cut any spending at all, not even go back to 2022 levels that they won't go back to. So there's an inflation problem, and it's not Jerome Powell's fault. And Jerome Powell has one tool that he can use to fight inflation. And though he is universally in some corners of politics unpopular for doing so, he's got one tool. No one is talking about the spending, Tommy, and that's what they have to address. So I think Jerome Powell has no choice but to fight inflation the only way he can, and that is higher interest rates, Tommy.
Yeah, because and I agree, man. It's just staggering when you add up these inflation numbers, and we're always looking at the year-over-year number, Kevin, but we're like 2 or 3 years into it, man, and you start compounding 5, 6, 7, 10%, some of those numbers. That's an interesting conversation I'm just having in normal life where people say, I hear inflation's 5 or 6%, but I feel like it's 25%. It's like, well, you're right. It is 25% over where we were 2 or 3 years ago. Because that's how it works, man. You're at 7, 8%, and that just can't happen. That just destroys wealth over time. And the ADP numbers, Kevin, just to finish up the conversation, because what was coming from that question was, you read the numbers, and there was some slowdowns in wages with some of the headlines that you saw out there, a deceleration at least, not a decrease,
Good
right?
point.
A deceleration. But, Kevin, they're talking about if you change jobs, 13.2% pay increase, and if you're in the same job, almost a 7% pay increase. Those are still some pretty bonkers numbers in any other universe, man.
Right.
So the Fed has some work to do, right? So it's interesting.
And those
we find
are
out today.
Tommy. Those two numbers are less than before, right?
Crazy.
That 13.2, that's down from 14.2.
Wild numbers, man.
Yeah, there's still a long way to go, Tommy. And like I said, we like to raise our flag, a victory flag. We're not even close to a victory over inflation yet. And so it's going to get interesting. Like I said, Jerome Powell, he's the adult in the room. He's got to deliver the bad news to everyone. And so doesn't really make him popular, but he's right.
Oh, you got to get inflation under control, man, no matter what, especially when we have the market at 4,200 and unemployment below 4%. Seems like they have a little bit of room to make sure that gets done. With that in mind, Kevin, it's Fed Day. What are you guys talking about at 12 o'clock on Fast Market today, man?
We'll be looking at Qualcomm today. We'll be looking at Etsy. And I believe, like I said, we're working on that third one. It might be Peloton. It might be Moderna. Royal Caribbean's got earnings out tomorrow morning. So we're working on a third one, but definitely Qualcomm, definitely Etsy today.
Nice. And, it's the one of the coolest parts, I think, about what we're talking about is nobody knows the answers, man. And we got some volatility in this market. And the moves yesterday, it's a two-way market almost in this market. The way you can trade it, sometimes that's a trader's best friend. And I love the way you guys set up the trades, defined risk in every trade. And boy, yesterday's move, that's, to value some defined risk when you're getting 80-point moves and then 40-point moves in the other direction. Kevin, I appreciate the time on a busy morning on Fed Day, man. We'll be watching at 12 o'clock today, and I can't wait to talk to you tomorrow, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, check it out. You heard it. They're talking Qualcomm. They're talking Etsy. They're talking a third stock as well. We got plenty of earnings this week going on as well, not to mention a Fed decision, 2 o'clock. Kevin laid out some great arguments, man. Where's the chairman going to go in that press conference? We get to find out at 2:30. What's the verbiage going to be in the statement at 2 o'clock? I imagine the press conference is going to be more important than most because we're so close to the pause. Right? We're so close to that transition. So we're pretty certain the hike's coming, but what's going to get said? Stay tuned, folks. We're coming back for the open. S&P is positive by 6. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P futures up by 5 points right now. NASDAQ 100 up by 14. You got the Dow up by 29. The Russell up by 5. It's going to be an interesting day. Usually we had some calmness, but boy, we got a lot of X factors in this market right now. Whether you're talking about Let's pull up the article with a little geopolitical risk, okay, sprinkled on top of Fed Day, man. You got Russia says down drone attack on Putin's Kremlin residence. Kremlin threatens unspecified retaliatory measures. This is the kind of stuff you do not want to hear, man. You talk about black swan fears, okay? Moscow issues an order banning drone flights amid rising fears. If that's really like a drone attack on Putin's residence that they're downing, now you can never believe anything coming from the Kremlin, okay? But you have to address the fact that that is a very real threat to escalate things, and that's not what you want, man. It's not what you want in any capacity, whether you're talking about just humanity or markets. The drones were disabled and crashed in the Kremlin without causing injuries or damage. That's what the Kremlin said in a statement. He was not at the Kremlin. Putin was not there at the time. So maybe a little bit of a de-escalation of possibility because he wasn't there. Again, all what they're saying, but regardless of what they're saying, for the reason what they're saying, there's a reason to ratchet up everything when these are the types of stories come out. So that gets sprinkled on everything, right? Then what do we have? We got a little bit of a banking crisis yesterday. Let's see how the banks are doing today. No let up just yet, man. Markets are positive. Even the Russell's up by 9 right now, and it got clobbered yesterday. JP Morgan down 0.8% right now. Bank of America down 0.3% right now. Watch out for these banks, man. There is no reprieve whatsoever. Citi down 0.2% right now. Wells Fargo, look at that. Wells Fargo up 0.5% right now for Wells Fargo. And PacWest, yeah, I wouldn't be touching that thing, man. Of course, you want to gamble? Yeah, there's a possibility they stay in business, they recoup everything, they repair their balance sheet, they get an investor, maybe they get sold off and you trade higher. Let's see what we're trading at right now, this company. What are we valued at? We're valued at $800 million right now at a price of $666. Watch out, $800 million. They can go lower than that, man. You saw it on First Republic. You saw it on many others. One of the most remarkable things on First Republic, just going back to learn something, folks, okay? Because I remember talking about this equity last Tuesday, and it was still valued at $2 billion. And I was saying to myself, who's going to pay $2 billion for a company whose name is poison? And the answer was nobody, because the big banks were waiting for them to go under, for the Fed to take them over, and then they'd get a better price for the action. And meanwhile, you were at $2 billion on Tuesday. By Wednesday, you were at $1 billion, okay? And by the end of Friday, you were at, what, $200-300 million, something like that in terms of the market cap. So you still got PacWest at an $800 million market cap. It's still almost $1 billion company, and it's selling off like it's going to go out of business. So pay attention to that one. All right, let's check back on crude, man. Pushing lows right now, 69.30, not stopping on crude. You jump over to the dollar index. We're talking to our man Teddy Kegstack coming up after the next break. Great day to talk some currencies, man. Dollar index backing off. Look at that. I mean, you're talking about almost a full point move, man. 101.57 from 102.40, but all you are is back to where we were on Friday. Just mammoth moves in the dollar index across the board. All right, let's see what else I have pulled up here. Well, let's talk a little bit of the data because we talked about it, the numbers that they put in there. Well, we talked about that one, I guess. We talked about the Fed. Yeah, we talked about the banking crisis, right? Now, you're not going to get a pause. People are arguing for it, okay? It's not going to happen. And we come into some news on the treasuries. So the Treasury flags bigger sales as soon as August. Yeah, they're going to be pushing out debt, folks. And then they're going to have buybacks, though, in 2024. They released the quarterly refunding debt statement. They expect to boost sales in time due to the deficit, right? Makes sense. They're going to have to push out more debt. That's how it works. So they kept the sales of longer-term debt steady for the third straight time, in line with what they were thinking. But they unexpectedly announced a new program to buy back older securities sometime in 2024. So this is talking something about liquidity. I was hearing them talking about this early on Bloomberg this morning. Based on projected intermediate to long-term borrowing needs, the Treasury may need to modestly increase auction sizes later this year, potentially as soon as August. Okay, so they're going to increase auction sizes. That means more debt getting pushed out. But this is the more important part, okay? The Treasury announced that after months of consideration, it's kicking off a buyback program in the calendar year next year. I mean, it's already May, folks. That's 7 months away. By buying back older securities and issuing more of the current benchmarks, one aim is to help bolster patchy liquidity in the Treasury market. So they're going to buy back the ones who aren't as liquid older. They're going to issue newer ones. The program could help the department smooth out volatility in its issuance of Treasury bills as it manages its cash balances. Treasury anticipates designing a buyback program that will be conducted in a regular and predictable manner, initially sized conservatively, and it's not intended to meaningfully change the overall maturity profile of marketable debt outstanding. Not sure that's the case, though. I mean, maybe, but it seems like they're coming to a market that's having liquidity issues, okay? They're going to be there. They've shown that with the banking crisis. Look what they've done with the banking crisis, and still look what's happened. There was all this, rightfully so, compliments, right? And just really saying that they did so well to come in so quickly. They had the framework. They didn't let this go like 2008. They came in quickly. They reassured investors. They provided FDIC insurance. They took over the banks. They made sure that it didn't become a systematic domino. And meanwhile, it's still a systematic domino, man. So pay attention to risks that you may not know exist. What's the expression? Know enough to know you don't know everything, right? Know enough to know that you don't know what you don't know. As in, there's unknowns, folks. And when you see price action like you're seeing, keep in mind that people may know more than you, okay? Because when Silicon Valley Bank was deteriorating that day, there were people in the know that knew that $50 to $80 billion were going out the door, man. Okay, so there's people in the know, and don't think it's coming out of nowhere. As we see a little bit of a rollover, we get the Dow in negative territory, 33,732. S&P's barely holding on to the gains, up by 4 points right now. Let's talk a little AI, okay? So, Microsoft chief economist, he should be in the know. Danger of election interference. There's everything here, okay? And this is going to be the battle in terms of regulation and AI. And boy, when you can have a computer do everything, man, okay, you think about the potential for bad actors. Yeah, there's so much power in this technology, folks, and it is coming at light speed that we really can't fathom. It can do a lot of damage in the hands of spammers with elections and so on. I'd say you take just everything, humanity, right? The tools that they're going to have in place, man, are going to be able to do everything. We were talking about IBM yesterday in terms of some of the non-customer facing human resource roles in particular, okay? And one of the instances they brought up, if you didn't check out the program yesterday, talking about IBM, is that their CEO specifically said, you know, you're talking about some tasks that are going to be automated for sure in the next 5 years. Employment verification reports, right? You get a contact in your company. They need to verify your employment. Maybe they're seeking a mortgage. Maybe they're seeking to rent a home. You used to have to hire people to facilitate that transaction and verify their employment. Those jobs are gone, man. And when you think about the amount of jobs that perform tasks in that capacity, they're all gone in the next 5 years, folks. That's remarkable. What else is remarkable? These Forex markets. We're going to be coming back talking to our man Teddy Cakestat. We'll talk some Forex. Stay tuned, folks. Don't go away. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report.
New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&P up by 6 points right now. We jump over to the dollar index. You got the dollar index down 36 pennies. We're trading at 101.59. Let's jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's newsletter. The Tiger Forex Report comes out every Monday with a new issue and updates throughout the week when warranted. And we talk to Teddy every Wednesday at 40 past the hour. And Wednesdays are always a good day, Teddy. And today is a good one as well, as we got Fed Day. Good morning.
Good morning.
So let's kick it off with the Fed, maybe, since it's the topic of the day. Are you looking for any action from the chairman this afternoon, as you know, your specialty being Forex? How do you approach a day like today, where we get some pretty interesting news? All but assured we're going to get a hike, man, but there is some volatility in terms of what we get after that.
Absolutely. Well, I'm looking for a quarter-point hike. You know, that's something that I think is going to continue for all the rest of the Fed meetings for the rest of the year. So I don't see how there's anything in our economic numbers that is going to show that there's any reason for them to back off. You know, if everything they've done for the past year, and especially the last 6 months, if they're solid and that they're doing the right thing, well, then they're going to stay the course, because there's nothing in the market giving us any reason to see that there's going to be any type of slowdown in these, you know, influences, if you will, that they're trying to combat, you know, and especially now with the banking crisis going on, you know, there's such a perfect storm of things that for them to back off right now, I think is just a really transitory illusion that people are grasping. You know, a drowning man will grasp at a straw, you know, to try and stay afloat, you know, and I think that's where this kind of direction is coming from. You know, globally, the central banks, they're coordinating to try and float the rest of the banks because this crisis is so systemic, you know, and I think also as long as the other central banks around the world, until they at least stop being hawkish, we're going to continue to remain hawkish as well.
Yeah, what's the expression, right? I was thinking as you were saying that, I look at it as very hopeful, and like hopeful is not quite a strategy, or hopeful is not a plan, or what, you know, hope would it, because I agree. I mean, everybody wants them, for your own perspective, if you got, whether you're going for a mortgage, whatever it is, it'll open up the spigots in the economy. We all want inflation to go away, but is it going away? I don't know. Those numbers we got ADP this morning, Teddy, and I almost cracked up a bit in terms of everybody talks about lowest number since, right, decelerating numbers. You're seeing wages up almost 14% if you changed your job, and up more than 6% if you stayed in the same job. And so very tough to imagine that the chairman is going to, you know, pop some champagne and say we're done hiking. But guess what? The market thinks they're close, so we get to find out, right? Let's jump into some of the Forex numbers, man. We had some huge action in the dollar index. You've been talking to us about, you know, the dollar's all about the euro. We have, of course, the different pairings that are reflected strength versus weakness. But what'd you think about the action yesterday, man? All the way up to 102.40 I got. And then, boom, just like that, you give it all up, and we're at 101.55 right now in the dollar index.
Yeah, well, like we're pretty much back to where we started on Friday, and I think that the reality is it's Fed week, So, I mean, in the Tiger Forex report, I said right off the bat, be very careful trading any markets going into Wednesday's number. After it comes out today, I think the key thing will be to see what is the verbiage they put out. I think that they're going to remain hawkish and nothing's going to change. If they were to all of a sudden look like they're going to at least pause, for a couple of meetings or at least one meeting, I think then you'll see a market shakeup. But otherwise, the trend is your friend, and that's what's going on. What's really odd, though, is the inverse relationship, not just in many currencies are going on right now, but in the yield curve, with the 30-year and the 10-year reacting the way they are, it's more of a flight to quality type of rally. And that's what really scares me to begin with. And it gets back to like what you mentioned, the word hope. The trader's adage from the floor is no wishing, no hoping, no praying. And whenever you're using any of those three tactics into your, outlook, well, that's an appetite for you're definitely going to lose.
You're
going
to
be on
business,
the wrong
right?
side. You're not just in the wrong business, but whatever you're doing is going to be wrong.
Yeah.
So, and I think that's where we're really
Say
at.
that again. What was the expression? I like it. Say it again.
No wishing, no hoping, no praying.
No wishing, no hoping, no praying.
Three rules on the trading floor. If you catch yourself doing any of those things or saying any of those things, you should step off for the day because you're going to lose money. Period.
I like it, man. I do. Yeah,
So,
I hear you, man, because it is remarkable. And yes, because it's just, I'm agreeing because it's interesting. Because how could he say they're going to pause when why wouldn't you leave yourself room? And it's almost a self-fulfilling prophecy because the last thing he wants is the market thinking he's going to ease up. The best thing he wants is the market thinking he's going to hike 5 times in a row, and then maybe he doesn't have to, right? It's that whole self-fulfilling prophecy game of like, and that's where the market sometimes gets ahead. It says, listen, the market's saying, this is my perception, of course, but, he can't tell us he's going to cut. Of course, because that defeats everything else he's going to do. So they kind of adapted this mentality maybe that's the rhetoric, but that's what makes it even more interesting because I don't think he can go there this afternoon, and I don't know how. And guess what? He could, folks. Okay, maybe the banking crisis is worse than we think. That's in my head. Maybe an event or something because it's scaring him in the background because he knows a little bit more. I don't know. But beyond that, man, inflation's raging. So I don't know how you back yourself into a corner and say that you're going to do anything when you can just hike and then leave the door open. And what's the harm in that? What if they really were going to pause, right? Why would you tell anybody, right? You maybe give a hint, but you got almost 6-7 weeks with 2 months of data where you can put the message out if that's going to be the case, and you just leave some room. So,
and look at what's going on with the central bank shakeup now in Australia too. If this could be the ripple effect, if that spreads, it's kind of funny. Like when you study history, revolution is something that starts one place and all of a sudden grows. It expands across the world. What happens if there's a central bank revolution? We're in the middle of a banking crisis, and people have had enough. They're like, okay, 2008 was a result of bad paper that was created from the 90s. You can brush that off and be like, okay, this was a big financial mistake. This time, it's just complete lunacy. There is no reason for the banks to be in the crisis that they are right now. It's just completely mismanagement. It's people think that banks are there for one reason and one reason only, and to function a certain capacity, and they're not. They don't function at all like a bank is supposed to function anymore. And I think that is one of the biggest problems to begin with, because there's no fixing the problem if we don't change that outlook and attitude towards how banks are run. Banks need to go back to how they're supposed to be run, and they're under the original principles of how banks, what they function as. Banks are not brokerage houses. They are not investment houses, and that's what it's a free reign for people to just take other people's money and just start putting it wherever they want, and that's just not how you can't run banks that way, and I think the biggest shakeup with Australia, and you can see this in the currencies too, look at their strength in the euro and their strength in the pound. Well, especially the pound, with their inflation running at the rate they're doing, the expectations is that the Bank of England is going to continue to hike aggressively to combat that, and they have high inflation with high unemployment going. These are things that are really tearing at their economy. In Australia, they just added 2 central bank members to the panel, and the original outlook was that they wanted to fire everybody, fire the whole board, get rid of them completely, and say, hey, the Fed down in Australia, you're doing everything wrong. and it has to stop. Now, if this continues in Australia, this is a big deal. If they can follow through and eventually evict all the current members of the board and have a complete turnover, what does that kind of signal does that send to the other central banks? Right off the bat, you know that central bank is no longer going to be hawkish and following the same principles that the other banks have been basically following the ringleader, the U.S., So, and Australia may not be, people don't think of it as the biggest, economy in the world or the biggest currency in the world, but it is one of the major currencies of the world. It's a commodity producing country. What happens there is very influential, and I think that's we have to watch that moving forward.
It's great information, man. I appreciate the time as always, Teddy, and it's always a wild one, man. We get to find out. We'll talk to you in a week. We'll see where the markets are, man. Thanks so much.
Sounds good.
Okay,
right,
have a great
care.
one. Folks, check out the Tiger Forex Report right under the newsletter tab. You get his archive webinar that he did just a few weeks ago as well. Check it out. We'll be right back.
Trading Room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks, and please check out Teddy's report, man. He comes on every Wednesday, does an outstanding report, the Tiger Forex Report, new issue out every week. And as I mentioned, you gain access to the archive webinar. He just did April 19th, outstanding webinar for 60 minutes. You really see how he walks through all the pairings and the divergences that he talks about so often when he's on the air with us. And folks, currencies right now, so important across the board. Back to the markets, we get the S&P catching a little bit of a bid. You talk about two-way market, man, okay? Yesterday, you traded down about 70 points from where we were at 9:30 in the morning. I mean, I did my show, folks, just zooming in on the action. I got off the air, and the market was still at 41.70. And, boy, the run really began right at 10 o'clock, right? I got off the air, and I was watching the market, had some trades on, as usual, so I'm watching the market, and it just dropped out of bed, man, just like that. And what happened, though? Yeah, you talk about a bounce, man, okay? We are nearing a bounce now. Come on, zoom in. What's going on here? Let me reset this. Excuse me. Yeah, we're talking about a bounce, and the reason why I want to bring it up, right to the 618, okay? It's going to be an interesting area, man. 41.51, right at the 618, and that is the drop-off from basically the market open yesterday. We were already slightly in negative territory, about 10 points or something. And you could make the case that this was a sell-off from here. You could make the case it's a sell-off from here. But that was a one-way move, man. Right out of the gate at 9:30. And where are we? We're just coming above that 618. So, yeah, we got a two-way market, man. You're talking about 70 points down. You're talking about 40 points up. And what I'm going to leave you with, folks, okay? I'm going to leave you with core inflation. Because remember this, because this is what the Fed is looking at. They want inflation to get back to 2%. Let's blow this up. You got core PCE year over year in the black. Yeah, it's declining. You got core PCE services, less housing year over year. You could make the case that the Fed is even more focused on that area, okay? Because housing, not maybe as volatile or not the impact that the core PCE services are having on inflation right now. Folks, they want these numbers back to 2%. I'd say they're stuck right now between 4 and 5. It would be a leap of hope to say that inflation's under control looking at that chart, man. It's Fed Day, folks. Stay tuned. You got Basil Chapman up next, folks, and he's got a webinar tonight. So sign up for that. I meant to talk about that coming up tonight. Stay tuned.